following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 29th. Fantastic Friday edition of today's Trader's Edge show. I'm Rhodes TV. Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one, and let's make sure we have an extraordinary weekend. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We'll go figure out what they're communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. Internationally, 727-445-1044. Let's get this party started because it is fabulous and fantastic Friday. Of course, this is the Hotel California. It's sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trade up 270 points, trade at 16,339. S&P up about 30 points, trade at 1923. NASDAQ Composite up 66. She's trading at 45.74. Russell's up 18 points, trading at 1021. Gold's up $1, trading at 11.17. Silver's up 3 pennies, so we'll call it flat at 14.27. Light sweet crude is up 12 cents. Wow, that's really moving higher to move the markets higher. Nah, you and I know that that's a BS correlation out there. Eventually, the media will pick up on that, and they'll go ahead and get rid of that correlation in their hearts and minds out there. Moving to the upside, dollar-wise, you've got AutoZone. That's the leader, up $17, a little over 2%. Coherent. I don't know, is it Coherent Software? Coherent Inc. That's up 22%, up $13. Google's up $12. Intuitive Surgical's up 10. BlackRock is up 10. San Filippo, John B. and Son. Hey, I like just saying that. JBSS, that's its ticker symbol. That's up 18%, up $9.61. Amazon, you and I, we took a look at Amazon yesterday, right? We called the consolidation. It's trading off $48. You and I said, hey, here's where the downside is likely to find support inside Amazon. And you were exactly right. We said that Amazon had come back and had tested that sign of strength. Let's go ahead and get the volume characteristic. Okay, that didn't work. Let's try to get the volume characteristic on this screen. Otherwise, it's, where do we put it? There we go. You and I, we had identified the breakout session here on October the 23rd. Wide-ranging bar, accelerated volume, 10.7 million shares. We know that Amazon had pulled back to that area, tested it with light volume, started to move higher, had a nice sign of strength out here. Yesterday was moving higher with a volume of, 14 million shares. That's actually a sign of strength off of the bottom. Now what has it done? It's pulled back into that same breakout area. Volume today a bit hefty, 10.4 million shares. We're only, 3.5 hours into the trading session out here. But really, what Amazon is setting up, probably for some time to come, is a consolidation zone. That consolidation zone, you called it, between 570 and probably 657, maybe the 675 level out there where we've got that gap down. So you've got the power of these two gaps out here. But what we all know is Amazon held support. In the meantime, let's go check out the rest of these markets out here, try to figure out what it is that they are doing. And what they're doing is they're moving higher. You didn't need me to tell you that. But what you did need me to tell you is, where is it going to stop? So let's try to figure that one out. We'll do this methodically, as we always do, to truly try to understand what the markets are doing. Let's start off by taking a look at the daily time frame charts here for our futures contracts. And we're going to look at the upper left-hand corner. That is the ES Mini. That's the S&P futures. The upper right-hand corner, that is the NASDAQ futures contract. Lower left is the Dow. Lower right is the Russell 2000. As far as which contract right now today is going to be more important to us, I would have to say probably the ES Mini. Probably the S&P futures contract from this point forward, from 1 o'clock in the afternoon until 5:15, but really till 4 o'clock, which you're probably most interested in. It's going to tell us whether or not these markets have enough energy to move higher. Why? Let's go ahead and blow up the screen out here. Today's show is sponsored. This is the Hotel California, sponsored by Tiger Financial News Network. But the reason that we're saying this is an important level is because of that sponsorship by our TAS market profile system out here. And if we take a look at it, what you're going to notice is we have a little convergence here. If you're watching the actual data panel on my upper right-hand side of the screen out here, what we can see is that at 1918, forget about the nickel, because it doesn't exist out here, but it does in theory. But you and I know the difference between theory and reality. Boy, isn't that a good funny joke? If you're a golfer, you probably really know the difference. In any event, let's just stay on track here. And at the price point of 1918, we have the center of the box from the weekly perspective. That's where price is most comfortable. Buyers and sellers are most comfortable in trading. It's where we have, it's like drive. It's like when you leave work today or you leave wherever it is that you're doing, the golf course, wherever it is, and you drive, there's probably going to be an area of congestion that you're going to run to. There's an intersection in life that you're driving down, where everybody seems to congregate for one reason or another. Well, inside the markets out here, that congregation is right here at 1918. We're trading at 1918.50. So you've got the top of the daily box and you have the center of the weekly box. If that congregation decides to just move things forward out there, price will head, well, I don't know that it'll do it today, but it will start heading towards that 1946. But this is where the snarl is inside of the markets. And so this could be the high of the day. We might just trade right around here. We don't have that same congestion zone, so we don't have synergy amongst the daily equity futures contracts out here. So if we take a look at the Nasdaq is really drafting the S&P futures. And so the NASDAQ is saying, I got more room in my tank out here. I have more room to run up to its convergence, if you will, which is the top of the daily box, so similar to the ES Mini, but the top of its daily box, that happens to be the price point of 42.88. And the center of the weekly box is 42.79. So there's really no traffic jam right here in the NQ. And you and I will have to go take a look at some intraday charts to see if we can figure out maybe what's going on and whether or not this market can kind of dislodge itself as it's taking this lunch break out here. But let's go out to Boston, where it's certainly a different weekend, I would think, than last weekend with regard to all the snow, and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Hi, Steve. I'm doing well. As I said, I respect your opinion very much. I notice you never talk about trading futures.
What do you mean?
About trading them as an individual.
Well, I tell you what. When we come back from this break, let's talk about that. And what futures contract do you like to trade?
I haven't. I've had no experience. I'm thinking about it. I'm a novice.
Okay. Well, let's dip your toes in the water when we get back from this break, all right? So hang on. We're going to go back out to John in Boston, and let's go take a look at some futures contract, the equity futures contracts. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up 276. S&P is up 31. We're on the line with John from Boston, and we're just beginning the conversation about trading futures. So, John, you say you're a novice when it would come to futures, but how about just trading in general, or any patterns?
Trading in general, well, I'm slightly ahead for this year, which I guess isn't too bad.
Ahead is always good. Ahead is always good.
Yeah, I trade the index futures. I feel more comfortable in that than individual issues.
Well,
so
okay,
it's
so
not too much of a jump from the index futures. I mean, for the index stock indexes to the index futures. Except I don't know what kind of new risk I'd be involving.
Well,
Would I be jumping into some real snake pit?
Yeah, first it's always going to depend upon what it is that you're going to trade. So if you're going to trade the S&P futures as an example, you're looking at $50 for one contract. You're looking at $50 for every single point that it would move either to the upside or to the downside. So, and each contract, you need about $4,000. I think from an overnight standpoint, it's somewhere around $4,000, $3,700 to $4,500 that you would need inside your trading account. You absolutely, if you're going to be trading, if you're going to trade anything, you really need to use stops. If you're going to trade equity futures, you have got to have brackets around your trades, no matter what. So you've got to, in my opinion, you need to have some type of technical tools that you would use in order to make your trading decisions. And all
when you
throughout
say brackets, excuse me, do you mean a sell price also, or?
Yes.
I could see a stop on the bottom, but not to just let it run, to have a fixed price. And I guess you could always move it up a little bit higher if you thought it might break your upside sell signal, right?
Absolutely. So the benefit of having a bracket, the time that you are most objective about any trade is really before you get into it. And so before you get into it, you ought to be able to say, my target is X. In this case here, let's just open up a chart and take a look at it. And let's just say for some reason you had decided that you were going to trade the ES Mini, and at about 11 o'clock in the morning, you had an inclination that that was a bottom. This was January 28th, so this is yesterday. And you were going to make a determination in getting in there that your exit would likely be around the 1909.50. You would say, I listened to this Steve guy all the time. He talked about 1909.50 inside the ES Mini. On the day of the Fed release minutes, price spiked up, hit that right to the tick. He told us that that was going to be significant resistance. But I think that the market's going to go up from here, yesterday morning at 11 o'clock. When you placed your trade, you would say you're going to have a stop somewhere below that. 4, 5, 6 points, whatever it might be, your tolerance for pain, or where you thought was the limit with regard to where, if the stock went below that, you were just simply wrong on the trade setup. But you also want to have a target to the upside. This case here would have been 1909.50. While in that trade, you could move those up and down and manage that all the time. But it's best to go ahead, in my opinion, is that it's best to have your trade where it's thought out before you get in, what your objective is, and if the market takes you out while you're sleeping, because you see, these futures, equity futures contracts are trading 23 and a half hours, 23 hours and quarter, 23 hours and 15 minutes every day. Well, Monday, Tuesday, Wednesday, Thursday.
One of the reasons it seems so many days, what it does, like when I can't get at the market, it has a big run-up at night, and I'm locked out as far as short-term trading on the index options.
Well, I will tell you, it can have a nice run-up at night, just as it can have a nice rundown during the night as well. And so, as an example, just so you know, as an example, if I put up the NQ here, the NQ. Back, I think this is, so this is perfect. So back on the trading day here, John, of just to give you an idea, let's say you were long the NQs like my clients were, and this is back on the trading day of January 26th. And overnight, the NQs moved down with a huge force up until about the 4 o'clock time frame in the morning. If the market had been open, if all that trading in the futures had occurred while the market was on New York Stock Exchange hours, that trade for my clients and I, we would have been stopped out of it, no question. But what the market was doing at 4 o'clock in the morning was just making a really nice reversal pattern, one of the reversal patterns that I talk about. And so by 9 o'clock in the morning, all of that move to the downside had gone away, and we were not stopped out of our trade. Like in that case, we were trading the TQQQ. Was the position. Maybe some people would have just chosen the Qs out there. So it has its advantages and its disadvantages. I like it because it gives you the ability to, if the market moves against you, it has the ability for you to get out, because the name of this game is protecting your capital. And you can always get back in, just as you had really pointed out there. But you've got to, I would never recommend trading because your trades are going to be live, if you're holding them overnight, and there's no reason that you don't have to. The only reason to not do it is if you don't have stops. If you don't have stops, you're asking for your equity to totally get wiped out. And there's just no reason to do that.
I go along with it. You're right with stops. Definitely, I agree with you right there.
Yeah, and let's face it. If you have a target exit and you happen to get stopped out for a profit, if you're going to complain about that, then I'm not really saying, when I say you, I'm not speaking to you, John, but if someone's going to complain about that, this was always a business or game about making money. You can't when you start complaining about making money, then you got to search for a different game. Because the whole objective of this game is to make money. You can't, and you can always get back in on a trade. So I think I devote a pretty good portion of this show, as well as in my newsletter service, Mastering Probability, we're making our trading decisions based upon what the equity futures markets are doing out there.
Oh, in your letter, you do deal with trading futures.
Well, we show the patterns that are out there. And so those folks, so there are many people, many subscribers that use those patterns to trade the futures, either because of what I teach them and they continue to just be newsletter subscribers and send me emails or pings or call me when a pattern sets up. Look, the whole objective of me investing my time here each day is to help you to be able to go out and fish and figure and do these things for yourself out there, because that's really where the empowerment comes. As we speak right now, we were trying to answer the question, is the market stalled, before we went to your call. And this happens to be the 30-minute chart here for the NASDAQ futures. And one of those patterns that I teach out here as we were coming on to the air at 1 o'clock, it was making what I like, that seventh inning stretch. John, you like baseball?
Yeah.
Well, you gotta, if you like baseball, you gotta like that seventh inning. And inside our markets, we've got a seventh inning stretch out here, and that often is the time when the market makes either high or low. And at this stage here, this is setting up for the possibility, we don't have a confirmation for another 4 minutes out here, but that we may have just hit our seventh inning stretch. And that's one of the other patterns that I like to teach and that people can trade off of out there. So I hope that helps answer some of your questions.
It helps a lot. Thank you very much, Steve.
You bet. And enjoy your weekend, one without snow, I would believe, yes?
I think so, right.
Oh, good. All right. Thanks so much for calling. That was John in Boston. We get back, let's go take a look at some of those other equity futures contracts, see what those pattern setups are communicating to you and I. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back Folks, Dow's up 281, S&P's up 31 points. So let's try to step through this here. We were talking about the NQ earlier, and you'll see a number of different lettering systems that are on my charts out here. And what we know with regard to the NQ, it's very close to that seventh inning stretch as John and I were discussing out here. Actually, we did get a confirmation of that. And they've got two different alternative type counts out here. So it may not be on this one. It might be on the next count. But at this stage, what we know is what I know about the NQ. It's approaching a level where oftentimes you can see the quickest or swiftest reversals. You don't have to, but oftentimes where it's just simply going to mark an exhaustive move to the, in this case here would be to the upside. That is on the NQ. We were talking about the ES Mini on the daily chart and how that has hit some areas of resistance when we took a look at our TAS market profiles. Now, as we take a look at our wave count system out here, it too is still in that seventh wave. We don't have a confirmation of it, but that says we may be nearing the exhaustive level for the ES Mini. So if you start to see a pullback at some point in time during the afternoon, don't be surprised by that. That's the message. And look, that's a 30-minute time frame chart. So you want to always keep things in perspective. You and I, we spent a lot of time last week looking at, or yesterday, taking a look at weekly charts out here. Maybe we'll get a chance to do that today. If we look at the 30-minute chart out here, when it comes to the Dow futures, it is only in wave number 6 out here. So it hasn't begun to get into that seventh wave out here. Sometimes these equity futures contracts, they'll become a little bit discombobulated. That'll even know if that's a word out there, but we simply go ahead. It's a technical term. If you're a trader, basically every word in the dictionary and out of the dictionary happens to be a word out there. We get to make up words. Isn't that a cool thing? If we take a look at the Russell 2000 futures contracts, it's in wave number likely 5 or 6 out here. We'll go with, well, it's in wave number 6. Pretty simple. So it's got some room to go before it could make that final seventh inning stretch out there. Okay, so what we know is on the 30-minute charts out here, things have stretched themselves to levels where oftentimes, not always, but oftentimes you start to see some reversals. We know on the daily chart for the ES, it's up against a significant level of resistance out here. Not that it can't bust through. We saw the 1909.50 level fail. And as this morning, as I happened to be inside the Tiger's Den, we got to a point where I wrote in there, it looks to me like this next move up or this next run up is going to end up failing. The market's just been chipping away at 1909.50 and would finally just simply give way. But that number vanishes at the close of today's contract. That number goes away, and a new number will appear for Steve-O. Okay, now let's switch over and take a look at what's going on inside of the cash indices out here. Let's look at the NYSE, the composite, the Dow, and the S&P 500. If we take a look at the NYSE, oddly enough, that's we'll call that the wider swath of our market out here. The NYSE and the S&P are pretty much the strongest. I'd say the NYSE is a little bit stronger, believe it or not, than the S&P 500. What do I mean by that? Well, if we just look at the retracement off of the December 29th high to the low that formed out here on January 20th, you can see that what the New York Stock Exchange has done thus far, it really depends upon where the close is. But right now, we're up above the 0.382 retracement level. NYSE is saying if it's got more strength, if it doesn't really care about these seventh waves, if it has more strength, it'll target 97.91. Now, right down below is the advanced decline oscillator out here. It's gone from extreme oversold conditions, and when it was doing that, as price was moving lower, we were making higher bottoms out here. That was why my clients and I got into a long position inside the Qs out there, was one of the reasons that we did. But now we're up above the 150 level. We're at 174. What's the 150 level? 150 level is where one of two things can happen. Those two things are the promise of higher prices to come in the ensuing days, possibly weeks out there. It is oftentimes where you can find the jet propulsion, the promise of higher price, or it could mean that it is an exhaustion move. Now, in a bear market, in a descending trending market out here, oftentimes it is the mark of an exhaustion move. What do I mean by that? Well, let's just take a look at just the New York Stock Exchange. Let's explode it up. Let's take a look at the last times that we had those plus 150 readings out here. Let's turn on the data window so that we can actually see that. Okay, it's right over here. And if we look to the trading day of Here it is. Looks like December 23rd. Was it December? Yeah, December 23rd, we had a reading of plus 161.98. Our current reading, 174.48. Market just really kind of drifted higher for a couple of days. Actually made a lower low on that advanced decline oscillator, 161.52 on December 29th. And guess what? Then things started moving lower from there. That is the point that it was making an exhaustion move back there. Unlike other periods of times where you get to these high levels, such as back here on October 5th, and the oscillator, the advanced decline line, just kept moving higher out here. That was not the end of the move. That was not an exhaustive move out here. So the question is, where are we right now? And I'm going to answer that, but I think we've left this next person on hold long enough. So let's just go to Scott in Colorado Springs and say hello and try to assist him. Scott, how are you doing this afternoon?
Good, Steve. How are you?
Excellent. Thanks so much for asking. And you want to go out to the ballpark and have that seventh inning stretch is what it looks like.
Yes, sir. My question was what exactly is a confirmation of a seventh wave move?
The confirmation is simply that it gets to the seventh wave, and in the very next session, it does not make a higher high. I mean, that is your confirmation that that wave count is over. From a trading perspective, if you're going to trade those seventh waves, you enter the trade, either long or short, if it's in the equity futures market, and your stop is simply one tick above or below that seventh wave. Easiest trade in the book.
Okay.
Absolute easiest trade that is out there. And because what you're doing, this is like going fishing, right? When you're trading and investing, neither of us really know for certain what the market is going to do next out there. So when you can enter a trade and minimize your stop, in this case here, you still trade the same number of contracts. Let's say you just simply it is where you can have the lowest risk. In the case of the ES Mini, if you took that trade as an example. And I don't think we have a confirmation here just yet. Right now, so the high is 1910, I believe, 1918.50, I believe is the number. No, that's where we're trading right now. Give me a moment here. I'll get it for you. It is 1919.50. And if this candle session here closes that we're in right now, the high here has been 1919. If during the next, this is a 30-minute chart, if by 2 o'clock, the ES Mini does not get to 1919.50. We just had a confirmed seventh wave. And you could enter that trade, and your stop is at 1919.75. It's as simple as that. You might, in entering the trade, only give up 3 or 4 ticks, $50. You know, now you can get exited from that trade rather quick. So it could be a rather quick loss. It could be like poof, you know, it's gone. But ideally, that's what you're looking for, and whatever time frame chart it is that you would be trading. Does that answer your question?
Yes, sir. Absolutely. The nice thing about it is it tells you if you're right or wrong. You know, I mean, if you get stopped out that quick, you're wrong. So.
Yeah, exactly. You're wrong, and you come back and you reassess. Scott, if you want, you can hold on through this break. But
I'm good. I'm good, Steve. Thank you for your help.
All right. You have a nice day, nice weekend. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So during that break, we had the ES Mini make its next leg to the upside. It just simply extended that seventh wave count. So to answer Scott's question out there, we do not have a confirmation of a seventh wave. The earliest now that we could get it would be at 2:30. And that would mean that the candle session that would occur between 2 and 2:30 would not move higher than the high during this next half hour out here. So it's still in it. So let's say you're in the long trade here, and you see that you're in the seventh wave. You know how well they work out here for marking a extension and a move and possible retracement in the other direction. Works on both the upside and the downside. And really, and I know you believe me, but just take a look at the move lower here into 2:30 in the 3:30 in the afternoon after the Fed announcements out here. You can see how price inside the NQ was careening lower, gets to that seventh wave, and that turned out to be the bottom inside of the NQ. And that was back on the trading day of January 27th out there. So it's really worth paying attention to and respecting. Like I say, it makes for a nice trade because, as Scott said, when you're wrong. You get taken out right away. Now, let's try to answer the question. You're in the long trade. You see it happening. What are you going to do? Well, if you use whatever system you have, whatever tools you have to try to identify support and resistance, or you use the tools, just say, I'm just going to have a real tight stop, or I'm going to get, exit from the trade. But let's just say you're really trying to maximize things because we have other indications that say, shoot, this market could close at the high of the session going into it today, because we know that there's a lot of shorts inside the market, and their sphincter muscle is going to start to get, you got to assume their sphincter muscle is going to get a little bit tight coming into the 4 o'clock time frame. Because they were of the imagination that the market was going to always move lower. Or maybe they really hopped on towards the end there, at the time when they really shouldn't, when those seventh wave candles are being formed, to the downside. Not an advisable thing because they believe that the sky was falling out there. It's a market that goes up and down. Okay, enough of that. So here, if you were utilizing the market profiles, which we have up on our screen here, just a 30-minute market profile. So what we can see is a new one has formed during this last bar here, and this new one has formed, and it's formed above the previous one. That's bullish. It's a bullish sign. If I take a look at this little dotted area, it's closer to the bottom of that box. That's the point of control, the dotted area. There's your support level. And that's set up as a bullish formation, yet prices moved all the way above it. It's very bullish out here when a market profile appears here below price that's actually moving higher. So in this case here, you would certainly put your stop somewhere around the 19. The high of that top of that box is 1912.80 is the mathematical calculation. You'd probably put it at 1912 and 3 ticks 75 or 2 ticks 50 or something along those lines out here. But real strong box that just formed here on the ES Mini. I imagine, but not so in the NQ. The NQ, see here on the NQ, when we take a look at how this box formed, price is with inside the box. It's this candle one session that we're looking at versus inside the ES Mini. Remember, the ES Mini's been the one that's been the strongest up against that resistance level, right? When we were taking a look at the daily time frame out here, as we switch to it, of course, I've got to figure out where the heck did I put it right here. See how price that's that 1918 area, and right now you're trading at 1921. So if the ES Mini continues to get legs here, you're looking for it potentially even to move up. It's not unthinkable that it could actually be a hell of a day. Heck of a day, I said out there, by getting up to the 1946 level. But it could absolutely do that. Okay, so we talked about, but what's that mean for us Monday? Because we know that these markets can change on the snap of your fingers out here. And ordinarily, I would say that the New York Stock Exchange, the way that it's reading, ordinarily, I'd say if we were certainly in a real uptrending market, I'd say, hey, what a beautiful sign this is by having its advanced decline oscillator reading at about 176. But as we pointed out here, as of recent, these have been exhaustion style type moves. And that combined with some of the wave counting that we've got out here, it says you got to be careful. You got to be careful. Even though I can give you the most bullish aspects of this market, man, you got to be careful because some of these, I'll have a better feel Sunday night when I see how the market opens. But, of course, maybe anybody could say that to you. Hey, let's go out to Plymouth, Massachusetts, and speak with Tom. Tom, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing pretty well, Steve. How are you yourself?
I am doing very well. Thanks so much for asking. And you're calling about probably another triple ETF out there, I'm going to gather.
Yeah, I'm looking maybe for an entry point on the LABU.
LABU. So let's go take a look at it. I don't know why it's not showing up on my screen as far as what it is, but fill me in. What is the LABU?
It is the triple of the IBB.
The IBB, okay. So you're looking for a long position in it, and you're looking for that today?
Not necessarily, but it's down there today, so I'm wondering maybe start in on a position.
Boy, so the IBB is trading lower today, huh?
Yeah, it looks dangerous, but
I just want to take a quick peek at that. In a market, it's really trading sideways, which in a market that is moving as nicely as it is, oh, man, there's now I don't know if it's political oriented, right? Because of the race and the pharma and all that stuff, but man, something's not right out here. Inside this on a day like today with it moving sideways. The best advice that I could give you if I was just only looking at the chart for LABU and I was going to be taking a look at the daily chart, I'll put up some other profile time periods because prices below the daily boxes out here. And what I would have to say here, Tom, is that if you really wanted to nibble on this thing, okay, go for it. It wouldn't be probably my recommendation. But if the market continues, let's say, moving higher on Monday, and this can get above $7.08, right now your trade looks like $6.80. Then you might have a confirmation to go ahead and take a trade that could take you up to about $7.96. And I think you like to get in trades and just get a nice small little chunk and then get out. Is that correct?
Absolutely.
Yeah. So right now, just even the 60-minute time frame box price is right at its point of control, and it's a very narrow box. And I hate trading very narrow boxes because it just doesn't give you an edge. But if you could get above, or it could get above the top of that box, which would be considered resistance, you then have enough room maybe to take that trade because your stop would be on the other side of that box, like at $6.60 out there. But I just don't see it on any time frame as we speak right now inside of this equity.
Okay, Steve.
All righty.
Thanks for the advice.
You bet. Be careful out there. That was Tom in Plymouth, Massachusetts. Now, I was taking a look at the LABU. Let's go ahead and just put the IBB up here, see if it's the same setup. When we take a look at its boxes, see where it's trading, but really trading sideways. And the answer is it's really the exact same setup. Now, its box is a little bit wider, but that's because it's also price. It's a much higher price instrument out here. You're looking $260 versus $6 out there. But really, you'd probably trade the LABU off of the IBB and what it's doing. In the case of the IBB, then I would say, Tom, if you're still listening, that same trade works, but you want to see the IBB close above or get above 267, 267.91. Steve Rhodes with TFNN. We've got the Dow. Well, it's up. It's up 304 points. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
back, folks. We got the Dow up, 290 points or so. Let's try to summarize in the next 4 minutes what to be watching for out here. So as we come into the close today, over the course of the next couple hours, you and I know the following, so I won't belabor it too much, but I'll just simply put this chart up here on the screen. You've got the NASDAQ futures 30-minute chart. Actually, in the upper panel, you've got the ES Mini bottom panel of the chart. We know that when the NASDAQ was moving lower here into the reaction to the Fed minutes out here, the NQ was the only one that had the weakness where it moved down into that seventh wave out there. Turns out that in fact, was the bottom of that move. Since then, though, if we count our waves to the upside, you can see we are in wave number 7. Now, it didn't have any kind of price relative strength divergence issue back then. It does not have one as of now. But worked then. These patterns work more often than they don't. Otherwise, I would not waste your time. I'm just not interested in wasting your time out here. So we've got synergy between really these two contracts out here, I think in the Dow as well. So, the market needs to keep pushing higher every 30 minutes out here for this not to be of an issue today. It could be a failed pattern at some point in time, but just know that it's getting to a real toppy-ish type area. So if you're a real intraday type trader, you got to be paying attention to this right now. It just depends on your time frame out here. If we take a look at the VIX index, it's the one, next piece of information I would say watch this during the day, because this will give you a clue. When I say during the day, I mean at the end of the day. And watch the $20.91 price point. You're trading at $20.51. If the VIX index closes above $20.91 out here, guess what? That's not giving you a real bullish sign. That's just telling you that you came back and tested a support level out here. If it closes below $20.91, that's another message on the chalkboard to say, hey, not bad. Market could continue moving higher. Let's go out to Nashua and speak with Lou. Lou, thanks for calling. Thanks for holding. How are you doing this afternoon?
Fine, Steve. And you?
Excellent. Thanks so much for asking. And you're calling about NUGT, which is the ETF for gold out here. Tell us what you're doing and how we can help you.
Well, I'm in it, and I'm just wondering when to pull out.
Yeah, you're in it, and you're wondering what?
When to pull out. When to
pull out. Well, What was your trade plan when you got in?
Well, I thought it would run a little bit higher, but it's been possible.
I think you're right. I think it will run a bit higher out here. I think that let's just look at what it's doing right now. So kind of a potential swing point for it could really be from 2 days ago, January 27th. Now, that had 9.2 million shares on that move up. We're only at 4.8 right now. So I don't think it's going to have the volume. But nonetheless, as long as this closes inside of that candle session, January 27th, and that low is 23.25, that's okay. It doesn't tell you to exit the trade or anything. Lou, I think that NUGT is going to run up to the $28.70 level out there. If volume is pushing into that area and it has more than 9.6 million shares, stay with the trade. Because likely this would run up into the 31.50 level. If it gets into 27.92 to the 28.70 area and it's doing it with less than 9.6 million shares, maybe a good time to just simply go ahead and jettison the trade.
Right.
That's how I would look at it. But right now, and I don't know where you got in. My clients and I got in on this trade at the bottom. So
nice.
But if you're in just like yesterday or something, it's a whole different dynamic for you to look at. All right, my friend?
Yeah. Gotcha. Okay, I'm also along the S&P.
Okay, great. Well, I wish I could. I wish I could give you more input, but we're going. It's the end of the show. But I think I covered enough of what to take a look at in the S&P as much as I can. But stay tuned. David White will come up, and he'll probably give you his take too. All right, my friend.
Okay, great. Thanks, Steve.
All righty. Have a nice weekend, and that includes everybody out there. And I'll see you on Magnificent and Marvelous Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.